Imagine your bank app shows $500,000 tomorrow morning. Could you quit, live off the money, and do nothing else? It sounds amazing, and some famous investors say you don't need millions to feel free. But let's test that idea with real numbers and simple psychology. Stay to the end. I'll give you an easy formula to find your own comfortable number in under a minute. First, a few facts that might shock you. About 1 in 3 adults can't easily cover a $400 emergency with cash. The typical household net worth in the US is under $200,000, and nearly half of households don't have a retirement account. Interest rates swing wildly. Recently, savings paid almost nothing. Now they pay much more, and they can drop again. And a 1% yearly investing fee can quietly eat a big chunk of your lifetime gains. These facts matter because comfort comes from steady cash flow that beats your bills, not from a big number on a screen that is fragile. Here's a mindset shift. Wealth is not just a balance. It's money coming in versus money going out. If your money covers your life with a cushion, you feel rich. If it doesn't, you feel stressed, no matter your balance. Research on happiness backs this up. Classic work showed well-being rises as needs are covered and then levels off for many people. Newer work shows it can keep rising with income, but the extra boost gets smaller. Translation. Cover your life first. More after that helps, but less than you think. So, could you live off $500,000? If you parked it in a high-yield account or short-term treasury bills at around 5%, you'd earn about $25,000 a year before taxes. For a lean life in a low-cost area, maybe. For a big city life with a mortgage, kids, or lots of travel, probably not. And rates change. That's why retirement researchers prefer a safer rule. Take a small, steady percent from a mixed portfolio each year. You'll hear 3% to 4% often. On $500,000, 4% is $20,000. 3% is $15,000. That's a better baseline than betting your future on today's bank rate. A simple planning rule comes from that research. Multiply your yearly spending by 25 to 33 to get a savings target that can support 3% to 4% withdrawals. Spend $30,000 a year. Target roughly $750,000 to $1 million. Spend $50,000. Target about $1,250,000 to $1,650,000. This isn't perfect. Markets and health costs matter. But it's a clear, honest start. You also have 3 big levers most people ignore. Lever 1. Subtract guaranteed income before you multiply. If Social Security or a small pension will pay $12,000 a year and you want $36,000, your portfolio only must cover $24,000. Lever 2. Add a little income you enjoy. Earning $10,000 a year from consulting, part-time work, or a hobby business cuts the savings you need by roughly $250,000 to $330,000 using that 25 to 33 times guide. Lever 3. Location. The same life can cost half as much 1 hour outside a major city or in a lower-cost country with solid healthcare. That is why many people reach comfort not by growing the pile, but by lowering the burn rate. Now for a simple, safe structure. Use a bucket plan so you are not forced to sell investments at a bad time. Keep about 1 year of spending in cash or very short-term T-bills. Keep 2 to 4 years in safer income like CDS or T-bills. Invest the rest in low-cost, broad index funds for growth to beat inflation. In bad years, spend from the safe buckets while the growth bucket recovers. In good years, refill the safe buckets. Flexibility is the real safety feature. Here is your quick, easy formula to find your number tonight. Step 1. Total your monthly basics: housing, food, transport, utilities, insurance, healthcare, and a little joy money. Multiply by 12. Step 2. Add a 20% buffer for surprise costs. Step 3. Subtract steady income you expect, like Social Security or a small pension. Step 4. Multiply what's left by 25 for a bold target and by 33 for a safer target. That range is your comfort number. Step 5. Stress test it. Ask what happens if markets drop 20%, if interest rates fall again, or if your rent jumps 10%. If it breaks, pull a lever. Trim a few big costs you don't really value. add a small income stream you enjoy, or move somewhere your dollars work harder. So, can you live off $500,000 and do nothing else? For some, simple lifestyle, lower cost location, and a flexible bucket plan, yes. For many, it's tight and fragile. The smarter question is, what amount lets you live comfortably for your life, and which lever you'll pull first to get there faster? Spending, income, or location? If this gave you a clear way to think about wealthy versus comfortable, tap like so more people see it. Share it with a friend who keeps asking how much is enough, and subscribe to Pocket Pulse for short, no jargon money videos each week. In the comments, post your draft number and the lever you'll use first. This is education, not financial advice.